1 out of 5 Americans think it is acceptable to defraud insurance companies under certain conditions, according to the Coalition Against Insurance Fraud. The organization released the findings in a 2008 study, The Four Phases of Insurance Fraud. It found that the public is consistently more tolerant of specific insurance fraud today than it was 10 years before. In addition, studies by the Insurance Research Council show that significant numbers of Americans think it is all right to inflate their insurance claims to make up for insurance premiums that they have paid in previous years when they have had no claims, or to pay a claim to make up for the deductible they would have to pay. Insurance must preserve the fine line between investigating suspicious claims and harassing legitimate claimants, and the need to comply with the time requirements for paying claims imposed by Fair Claim Practice regulation. All states have unfair claim settlement practice laws on their books to ensure that the parties involved are informed for the progress of investigation, and that investigators settle the claim promptly or within a specified amount of time. About 19 states have provisions that provide guidance and protection for investigators by allowing time limit extensions or waivers, and detailing what evidence is required and to whom the evidence should be made available. Insurers anti-fraud measures. The legal options of an insurance company that suspect fraud are limited. The insurer can only inform law enforcement agencies of suspicious claims, withhold payment, and collect evidence for use in a court. The success of the battle against insurance fraud therefore depends on two elements: the level of priority assigned by legislature, regulation, laws enforcement agencies, and society as a whole to the problem, and the resources devoted by the insurance industry itself. To that end, most insurers have established a special investigation unit (SIU). As these entities help identify and investigate suspicious claims, insurers have also created a National Fraud Academy, a joint initiative of the Property Casualty Insurers Association of America, the FBI, National Insurance Crime Bureau, and ISCB, and the International Association of Special Investigation Unit. It is designed to fight insurance claims fraud by educating and training fraud investigation. It offers online classes under the leadership of the NICB. The liability system and medical malpractice insurance issues. Litigiousness has become a societal problem in the United States. The tort system cost to $2,054.7 billion in 2008 in direct cost, which translate into $838 per person, and many billions of dollars more in indirect cost, according to Towards Parents' most recent tort cost study. U.S. consumers pay directly for the high cost of going to court through higher liability insurance premiums because Liability insurance rates reflect what insurance companies pay out for their policyholders' legal defense and any judgments against them, and they pay indirectly in higher prices for goods and services since businesses pass on to consumers the expenses they incur in protecting themselves against lawsuits, including the cost of commercial liability insurance. Beginning in the 1980s, in an effort to reduce litigation costs, businesses, groups, and others mounted a campaign to reform tort law. Tort law is the basis for the US liability system. Most reforms have taken place on the state level, and during the last decade, all but a handful of states passed significant tort law reforms. However, some have been overturned by the courts. Many reforms efforts have focused on medical malpractice issues. Medical malpractice insurance covered doctors and other professionals in the medical field for liability claims arising from their treatment of patients. The cost of medical malpractice insurance began to rise in the early 2000 after a period of essentially flat prices. Rate increases were precipitated in part by the growing size of claims, particularly in urban areas. Among the other factors driving up prices was a reduced supply of available coverage as insurance several major insurers exited the medical malpractice business because of the difficulty of making profit. New research suggested that premium increases may be moderating, but for any significant turnaround to take root, major reforms in the delivery of medical care that focus on patient safety need to occur, industry observers say. State tort reforms issues caps in non-economics damages. According to the National Conference of State Legislature, 30 states, the Virgin Islands and Puerto Rico limit jury awards in malpractice cases. In the past few years, a number of courts have ruled against such limits. In Georgia, the Supreme Court ruled that a 2005 state law that limited jury awards for pain and suffering in malpractice cases to $350,000 improperly interfered with a jury's duty to determine damage in a civil lawsuit. In the decision, Chief Justice Carol Houston said that limits in any amount violate the right to trial by jury. In illness, the Supreme Court overturned the state's 2005 medical malpractice statute, which capped non-economic pain and suffering medical malpractice award at $5 lakh in lawsuits against physicians and $1 million for hospitals. The hospitals. The court ruled that the law violated the state's constitutional principle of separation of powers in that lawmakers had made decisions that should be made by judges and juries. Some states, such as Maryland, are deciding to retain their caps when challenged arbitration to keep small disputes out of the courts. Insurers are increasingly turning to arbitration, the nation's largest arbitration provider. Non-profit arbitration forums resolved more than 520,000 inter-insurance disputes in 2009, valued at $2.5 billion, for a savings in litigation cost of $700 million. Disputes leading to arbitration typically arise when insurance or self-insured companies believe that their policyholders or employees are not at fault, or due to a disagreement over the percentage of liability or the amount of damage. More than 85% of these disputes involved auto collision.